There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Can we go through a couple FX books? Would like to hear your thoughts. Share the FX books in the chat if you have specific ones you want me to review or have thoughts on, or what FX books would you like to see, Max? Just go ahead and let me know, and yeah, we'll talk about them. But Moy, definitely not indices, oil, or gold. You know, don't touch those right now. I don't have any settings for those. If you do use those, you're on your own for now, as I've just not tested those enough and have enough data to back any decisions on trading those. So the advice is no. Absolutely, the advice is no. I love how this one says how to blow your account. We're going to look at an FX book that literally is called How to Blow Your Account. I guess this is an advanced user call, so we will do that then. Let's go ahead and look at how to blow your account. I mean, they haven't blown their account yet. They did 83% here, 55% December. All right. They are using a true martingale. Number one, high risk, using a 2-lot multiplier. You can see start lot was 0.3, next lot was 0.6, next is 12. So they're using a true martingale strategy right now. They have won 68% of trades. Their profit factor is still above a 2, which is good, but it's been running for, you know, little less than 2 months. But they are up in 2 months 197%. They did get into a 58% drawdown. I mean, I'll put it to you this way. This account, they're making money. But again, you know, this is a high-risk account. I mean, I guess what's the question on this account? And I don't even know what settings they're running. Let's look at history here and the pairs. We got Euro JPY, USD CAD, NZD CAD, Euro NZD, Euro JPY. They've taken a lot of trades, which tells me that this is not precision mode for sure. This is some higher risk scalping type strategy with high lot sizes. Yeah, pretty high lot multiplier. I mean, they're getting in and out of trades because martingale does work well in many situations. This is at one point they martingaled all the way to a 1.28 lot on a $3,000 account. I mean, if that trade continued to go against them, this account could have blown. So looking at the history and the risk, yeah, you know, I'm not sure if you guys can see that either. I know it's a little blurry on our end. Have to figure out why that is again. But yeah, going through that account, that is my opinion on that one, Max. It intended to be ultra aggressive, but it turned out great. Yeah, I mean, so far it's turned out great. I mean, 2 times lot multiplier, again, I'm not a big fan of the 2 times lot multiplier just because, again, if something trends really hard against you, you are going to find yourself in a very bad situation. And the reason I tell you all this, and the reason that I am so strict on my precision modes, is because, yes, if you're using more aggressive modes, there's many situations where you can make a ton of money. But in all market conditions, there is a high probability that and you end up in a bad situation where you lose your money. You know, and that's just to be honest, because I've been here, I've used instant entry many times. Increase starting lot. What do you think is the best way to scale this account? Increase starting lot or add a new pair? I'm a fan of increasing the starting lot, not adding more pairs when you're in instant entry mode. Instant entry isn't really meant for more pairs. Instant entry on Euro NZD is also pretty crazy, but you know, if you're rocking it, you go for it. But that would be my advice on that account. I mean, again, you know, I see it's made a bunch of money. It's a very aggressive account. It's done very well, but yeah, it has done a crazy return in less than 2 months, so you know, can't complain on that. How about this one? All right, let's check out this one. What are your thoughts on anti-martingale? Sam, great question. I'm a big anti-martingale person. That's why the lot multiplier in GearBox by default is at 1.15. We scale lightly, we don't scale big. Because again, if you're using a large account like Max, I'll give you an example. You know, obviously when you have a smaller account, a higher lot multiplier isn't as aggressive. You can stand a little more drawdown, but let's just take a look at, where is my managed one? Here we go. Again, I told you I was gonna show you the demo $1 million accounts. I'm not gonna show you the live ones right now because I need to protect the identity. But this is what's copy trading over to the live. So this is our conservative one, running the daily time frame and running all the pairs, and you can see it's up $11,000 in the last week, a little over 1%. Our moderate account as well is crushing it. So you know, we have a few different accounts doing their thing and just rocking and rolling. This is skip a level with high starting lot. And yes, Max, I will be able to share those instead of the investors once we do go ahead and launch that. Oops, that FX book didn't work for me, Max. I'm not sure why. You have another link, that one did not. Oh, I see what the problem is. It copied a bunch of other nonsense here. There we go. Okay, this account started in November, and high aggressive strategy. It's, again, over a 2, profit factor. Still doesn't have that long a runtime, but 232%, that's big. 70% a month, pretty insane. Getting drawdowns high, but it's been winning. And again, it all depends on the situations and the market conditions. Right now, it's experienced some good market conditions, but again, if something heavily trends against you, there is a higher risk, you know? You have to be prepared. When you're doing high risk stuff like this, you have to be prepared to take a loss. And when I see 54 or 55% drawdown, I see people that aren't prepared to take a loss sometimes. Oftentimes people who use very aggressive strategies tend to try to use lower equity protectors, and if something trends against them, they'd rather just lose 10% than go into 50% drawdown and then try again. Other people are okay with the drawdown or are okay with blowing the entire account if it means that. But, I always tell anybody doing aggressive things, have a risk management plan. What's your risk management plan? Are you okay with blowing the account? Do you use an equity protector? Where would you cut a loss? Right? What is your situation? So anytime you're doing aggressive things, you need to have a risk management plan, because you got to understand there's going to be a situation where certain market conditions would wipe out this entire account. And if you don't have a plan, you know, you could run into a bad day. So that would be my advice there. For my aggressive strategies, I don't use all my capital. If I go over 50% drawdown, I have more funds to top up. And that's a great risk management plan, Max. You know, and you just need to make sure anybody else that's doing highly aggressive things has that same risk management plan in mind, that they know. I'll put it to you this way. An aggressive trader once told me, you only risk 50% of what you can lose, so that if you need to top up your account, you have the other 50% to do so. Yep, great plan. If I have 10K and only use 2K to trade with and the rest for backup, even better. It's 20% and 80% for backup. So, you know, again, that's a great risk management plan. You got to have those plans in mind when you are doing aggressive strategies to protect your capital and your account, and be able to manage yourself and your money. Here's your precision one. Let's take a look. See, your precision's gone in a higher drawdown, which is crazy to me. But overall, it's been crushing it for a long time now. Since the inception of GearBox here. Amazing. Did you increase your risk around here, or what caused the higher drawdown over here, Max? You know, the profit got big. This is a big profit jump, but did you increase any risk after this point, or, you know, because you were running really, really steady, and then, you know, it seems in December and January you got into higher drawdown, which you hadn't experienced before on this account ever. So did you increase your risk in December and January on this precision account, or why all of a sudden the spike in drawdown that wasn't previously existent? This one swing, but with ultra high start lot. But that would explain it. And CHF, JPY, and AUD, and ZD, that explains it for sure. Added a lot of manuals with those pairs. Yep, manuals will do that. They go against you. You know, that's why my precision accounts, I don't do any manuals on. I do those on my skier accounts always. Try to stick out of messing with the precision accounts, because oftentimes I find myself in those same situations. So that makes sense then. Because I was going to say, you had very low drawdown all the way through. You know, you hadn't ever touched above 20. And then, you know, all of a sudden had these spikes. Like you said, I guess came from some manual trades you stacked in. But for the first, you know, year, you were solid till you started adding some manuals here on the drawdown. But all in all, yeah, I can see all the manuals here. Anything without a stop loss is a manual. We got 2 GearBox trades and a bunch of manuals. I see it. Okay. And here is your gambler account. Let's take a look at your gambler account. You got a lot of GearBoxes running. I love it. All right. And yes, this is definitely a gambler account, and I can see your strategy of adding money when risk got high many times, you know, and overall, though, pretty crazy to see an account do 57,000%, you know, and this is live and verified. You know, drawdown's crazy, but monthly's over 100% a month. I mean, it's a high-risk strategy. Look at this, 215% month, 146%. I mean, you've been crushing it, making a bunch of money, that's for sure. This account has done some insane things. You got over 21,000 euros in profit. I mean, and you've withdrawn all your initial capital. So at this point, Max, you're playing with house money, and GearBox has made you 21,000 euros. Pretty crazy. Awesome to see. That's a real testimonial right there. I mean, you just made the average person's yearly salary with a EA and withdrew it all in less than a year, really. Wow. Incredible. Love to see it. I have 5 more that aren't public. I want to try 2 new settings. Max, you keep experimenting. Whatever you're doing, you know how to use this thing, man. So proud of you and all your success you've had with this product line. It's definitely inspiring, and it's what I designed this product for, was people like you who learn how to use it, manage it, and understand their risk. So props to you and your success with it. I'll be back in a minute here. Just give me a second. Alright, I'll be back in 1 second. Hope you can all still hear me. You know, I gotta tell you, those strategies, Max, you know, again, as long as you know what you're doing, you know, it's up to you. I'm not gonna recommend or say I think this strategy is great or that strategy is great. I would just tell you that, you know, if you feel confident in it and you understand your risk, play with it. I've played with many risk settings with this product, and the only reason I'm so conservative these days is from PTSD. Yes, instant entry is a conveyor belt for TP trades. You aren't lying. You are not lying. It's just, you got to know what you're doing, and you got to be okay with the higher drawdown. And oftentimes people are not okay with high drawdown, which is why precision was created. Opinion and experience, I would tell you that I've used those settings, I've made a ton of money, and I've also blown accounts with them. That would be my my opinion and experience for you. That's why I tell you have a risk management plan. But if you have money to top off, then, you know, that's the main thing. Many of those times I wasn't topping off things. With aggressive accounts, I play with them, and if they blow, they blow. I don't like to add more money to accounts when they're nearing blowing, because, you know, you never know if it keeps going against you and you lose it all. I've been there in the past. So I just try to be very conservative these days. That's how I try to stick to things. I've done it. I told you, I've blown accounts doing that. So, I mean, again, you can do it. I'm just letting you know I've physically blown live accounts using those settings that you're talking about. So, again, it's up to you. Have your risk management plan, know what to do. But have I lost money with the exact settings that you're talking about? Absolutely. So, that'd be my opinion and experience. You know, but again, obviously you've been doing something that's working, and you have a risk management strategy, and that's the most important part. If you have a risk management strategy, you know, you can do anything. I mean, the risk to reward was high risk and, I mean, high reward. But, you know, again, I mean, I'll give you an example of a gambler account that was very crazy. I'll show you an account that in 3 weeks went from $1,000 to $38,000 profit, and then the whole account blew. But prior to that, it hadn't gotten any drawdown all of last May. It took until June for it to blow. But for a whole month, this thing ran, no stopping it, and it literally had never gotten into but a 23% drawdown that month. And in 1 month, it did 3,826%, running just GBP NZD and GBP AUD with one level range and a 1.35 range multiplier. I mean, it was just ridiculous. It was taking a new trade constantly. This thing took 11,000 trades in a matter of 3 weeks. So this was a high risk account I ran, and, you know, it put 1,000 lots in 3 weeks on $1,000 account. I mean, come on, you know, it's just ridiculous. The risk to reward was ridiculous. But again, you know, it was working for a long time until something trended crazy against me, and then it blew the account, right? But in 1 month, yeah, it had crazy results. So this was a gambler account I ran, as an example, that ran pretty freaking nonstop until it blew. So, you know, always like to show people this so they can understand, you know, some different things. You can choose any different pair, right? I mean, anything. In that example, I was just playing with GBP NZD and GBP AUD, which are high ranging pairs. Probably not best for a strategy like that. But yeah, I mean, EJ, I can't say behaves well, and neither can I really on USD CAD. I mean, they make money, but they are both pairs that trend, once or twice a year very hard as well. Just like GBP NZD or GBP AUD, they do still trend hard. You're really going to want to stick to even maybe lower ranging strategies that you're going to want to find things when you're using those kind of strategies that just rarely trend a few hundred pips with no retracement. Both are going to be aggressive to me, Moy. Lower gears and higher lot size. Both are aggressive. Both are more aggressive to me, for sure. But yeah, I mean, max 57,000%. Pretty crazy, brother. Cool to see. Very cool to see. So, there's lots of advanced users with GearBox. You can do some crazy things when you know what you're doing and you're willing to customize the software a bit. But let's take a look and let's talk about the week ahead and talk about the news, talk about what's going on, what to expect. Take a look at Forex Factory here. Going into February. It's my birthday, February 8th, so nobody call me that day. All right, AUD. We got Monday some red folder news. Tuesday we have Canadian red folder and some USD and NZD. Wednesday we have OPEC. This affects all currency pairs, as you see, all. We also have non-farm employment change, ADP, USD on Wednesday. Thursday we have a lot of GBP and Euro and USD red folders, and then Friday we do have NFP. So this looks like a crazy red folder week, and knowing that, I personally would tell you that any intraday strategies or low gear entry strategies are going to be higher risk. They could be prone to higher drawdown. During crazy weeks like this with a lot of red folder, I'm a big fan of trying to stick to precision modes and things along those lines. So keep that in mind as you're taking your risk in what you're doing. To be a little more conservative this week, it would be in your favor to be on the conservative side anytime we're dealing with a lot of red folder news. But with that being said, I appreciate all of you tuning in with me as always and spending some time with me. Max, I'm going to be honest with you. I know you're working with a few investors, looking at your settings. When it comes to other people's capital, I'm more conservative than conservative. So if that helps you out, that would be my best advice for you, because you never want to be on the bad side of the stick when dealing with other people's capital or their ability to lose money, right? You always want to be very conservative when it's not your money to risk, and that's always my opinion and what I'm just going to share an opinion and advice and experience with you. Why does the time frame matter for GearBox? This is a great question, and because GearBox reads the charts and the time frame to decide the decisions on the direction of the trade it wants to go. So when you're on the daily time frame, it's looking for the larger overall move. When you're on the 4-hour time frame, it has the potential to play both sides of the market, which can kind of work like a Ferris wheel and keep you in drawdown consistently. Whereas precision mode on daily, oftentimes, when the drawdown swings, you're not in any drawdown. Whereas in 4-hour, when the drawdown swings, chances are you got into drawdown going the other way, while your other trades hit TP, and it just works kind of like a Ferris wheel and keeps you in drawdown all the time. So the lower the time frame, the more risk, always. And that would be my advice for you, Sam, on the time frames there. But with that being said, again, thank you all so much for spending your time with me, taking the time out of your Thursday, wherever you may be in the world. I know we run a global business here, and for those of you who tune into the precision calls, I will see you tomorrow morning, 11 a.m. Eastern, and I hope you all have a wonderful rest of your Thursday, wherever it is you may be. And with that being said, look forward to it, and make sure that you're tuning in live. If you can get to Miami this weekend for Saturday, we have our live Miami event. If you can't make it to Miami, make sure you're tuning into the stream, and I look forward to seeing you there. We got some exciting announcements this weekend, new product lines, new additions to Auvoria Prime to help you increase your sales and increase your user experience a lot of amazing things coming. So with that being said, have a wonderful rest of your day, everybody, and I'll see you soon.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.